Hello friends of Unicorn. Today, I'd like to share with you two things. Firstly, more focusedly on Evergrande, and secondly, more broadly about China as a whole. I guess by now, most of y'all would have heard of Evergrande because it's been hoarding the headline news for the past couple of months. So, who is Evergrande? In fact, Evergrande has a sprawling business. However, its flagship business is in property development in China. It is the second largest property developer in China. So, how did Evergrande get into the mess that it is in today? Well, it dates back to August 2020, where the Chinese government implemented the three red lines. Firstly, the liability to assets ratio of less than 70%. And secondly, net gearing ratio of less than 100%. And cash to short-term debts ratio of more than 1 times. Well, in case you may guess what these are all about. In summary, it's about curbing the loans of the property developer. Because for the last 20 years, the property development in China has been going on a very wild ride. So it has done very well, and a lot of property developer has been taking on a lot of loans so as to build more property in China. And the housing price has just been going in one direction, which is up. And last year, in August 2020, when they implemented the three red line, it is to curb the borrowings of the property developer. And let's look at this chart here. So if they pass all the three guidelines, which means it's all green, they can increase their debts by 15% annually. If they fail all the three guidelines, they can't even increase their loan at all. And if it's somewhere, if they get 1 or 2 pass, it'll be somewhere in between. And I just look at the annual report of Evergrande, and its interest payments is about 78 billion renminbi, and the operating income is 70 billion. What this means is that the operating income alone can't even cover the interest. Just think about it, if your income for yourself, can't even cover your mortgage interest, how does that feel like? And hence, if Evergrande can't take on more loans because it failed all the three guidelines, this means that it can't increase its loans, and which means it can't pay its interest. And that spells trouble for Evergrande. Hence, a lot of people say, well, is this the Lehman moments for Evergrande, for China? Well, and that's something I think we need to look into. So I will share with you the similarities and the difference. Well, the similarities is both occur in a large country, US and China. And secondly, both are in the property segment. And both arise due to huge amount of debts in the property segment. How about the difference? Let's get into it. Okay, so the subprime crisis, in fact, started 14 years ago. Okay, the president at the time was George Bush Jr. And what he wanted to do was to promote home ownership for the US citizen. And hence, he encourages people to own home. He sets very loose regulation for people to borrow money so they can own their own home. And then came their best buddy, which is the Federal Reserve. And the chairman at the time was Alan Greenspan. He dropped interest rates from 6.5% in year 2000 to 1% in 2007. And hence, with such a drastic decrease in interest rates, again, it spurs people to come to the party, to come and borrow more money and to buy their own home. So with the two heads of the nation, the government and the Federal Reserve setting the tone, well, a wild party is about to start. So guess who is next to join the party? Okay, the next to join the party is Wall Street, the US banks. And they came to be lending out money to people. You see here, this person is Chuck Prince. He was the CEO of Citigroup at that time. And he mentioned, as long as the music continues, we have to get up and dance. But the moment the music stops, things are going to get complicated. The music here means liquidity. And the dance means going about doing risky things to earn good profits. So what he means is, as long as the Fed keep churning out liquidity, low interest, we got to get participated, and to give up loans and to join in this party. But he also knows the moment the liquidity tightens, which means the party ends, things are going to get complicated or ugly. And hence, the moment the property market starts declining, that's where things started to get ugly. Because at the time, there's this thing called 125% loan, which means if you own a property of 1 million, you can actually get up to 1.25 million of loan. But that looks quite ridiculous, right? In Singapore, if you have a $1 million property, at max, you can borrow 750,000, definitely not 1.25 million. And hence, once the property market starts to go south, and a lot of these banks end up having to foreclose the property, because they are running a risk now. The property value is much lesser than the loan amount they are giving out. And hence, this snowballed into the subprime crisis. And it hits the people who has been happily joining the party, the US citizens, who are busy buying property, even though they can't own it. They can't afford it, but they were still on this speculative frenzy. And with the investment bank, they actually packaged these loans and ship it out to the rest of the world. Hence, even in places like Singapore, we also get hits with things like the mini bonds. So that was a whole episode of the US subprime crisis, which of course turned out very badly, where the world plunged into a financial crisis, and stock markets, the major ones, dropped by between 50 to 80% during that time. Fast forward to 14 years. Is China now the US Lehman moments? Let's draw the difference. That time, the US government, what they were doing is they were allowing the party to continue, allowing very loose regulations, allowing low interest rates, and allow people who were to get onto this speculative frenzy. And hence, when it ended, it was a severe hangover, as you see down here. For China, if you see where the whole thing started, it was actually the China's government initiative. And hence, what they were doing is like here, enough, no more alcohol for me. I don't want to get drunk by the end of this party. So it's putting a stop to it. Seeing from another analogy, it's like US, they're driving a car at 100 kilometers per hour, and it's slammed into a wall, and hence the impact is huge. The Chinese government, is going also at a certain speed, but now it is stepping on the brakes to slow down the car, slow down, such that even if it hits something, it's not going to be very severe. So that we have to draw the difference between then in US and now in China. So what do I think will happen to Evergrande? I think the kind of panicky, messy outcome will be unlikely. What's most likely, we can take a cue from its predecessor, the likes of H&A Group, Fortune Land, Anpang. For most of them, firstly, the shareholders unfortunately get wiped out. The bondholders have to take a haircut, which means they can't get back the full amount of what they lent to the company. And thirdly, the company gets nationalized, which means the Chinese government buys over the company and then subsequently either managed it as a state-owned company or they will sell out the various business units separately. I think the Chinese government has the full ability to manage this. Firstly, because the debts are largely renminbi denominated, which means the Chinese government can even be printing money to be repaying these debts. And the China's foreign reserve currently is about 3.2 trillion US dollars. And Evergrande's debt is 300 billion, which is about 10% of their foreign reserve. And hence, they also have the savings to pay off these debts if they want. And furthermore, the Chinese government were the one that stepped on the brake that created this issue in the first place. And if they like, they can easily just leave their foot off the brake and allow the things to go back to its previous states. So let's now go to the second part, which is to go broader on China as a whole. So besides this forced deleveraging of the Chinese property developers, other issues that happened in China this year were things like the added regulations for the technology companies in China and also the banning of private education company. So all this seems to be quite a big impact to the stock markets, given it all happened in a short space of time. So what do I think will happen in the short term and the long term? Well, firstly, I think we need to take a look at why is all these things happening. It happens because Xi Jinping is the one that orchestrated what he wants China to be like in the longer term. And recently, he wrote in the government publication called 求是 what he means by common prosperity. And he emphasized common prosperity is not like the former China communism, where people can just lie flat and don't do anything and money will go to them. In fact, that's not going to happen. What is happening is that there needs to be a common prosperity. We need to be allocating the wealth more evenly. But those who are hardworking should still be getting rich. They should still be getting a bigger share of the pie. But they should not be getting the whole pie. The rest should still be getting part of the pie and still be living well. And that is his vision of common prosperity. So with this happening, I think the economy in the short term will slow down, but it will be very well cushioned. Firstly, because the monetary policy is still a very orthodox one. Currently at an interest rate of about 3%, it gives them room to actually loosen their monetary policy and interest rates if needed. And secondly, rather than looking at it as a lost output, I think it's a reallocated output to areas which is to the nation's interests, like renewable energy, high-tech manufacturing. In fact, all this will be areas of importance where China government will be allocating resources to. In the longer term, I think in fact this is very favorable to the economy of this narrowing of wealth gap. Let me give you an analogy. Imagine if a very rich man today has $10 billion. How many meals can he eat a day? 3 meals, right? Probably. But if this 10 billion is now given to 1 million people, $10,000 each, how many meals can they consume in a day? It's probably 3 million. So there's going to be so much more consumption when the wealth is distributed to the masses. And that will be a big plus to the long-term China economy, which I think is going to be very favorable. However, I like to caution the economy is not the stock market. Although the economy has a part to play in the stock market performance, but there are other factors. Okay, so I think the China economy is going to do well in the long term. Let's look at the stock market now. I think the stock markets were going to require a lot more homework going future for investors. Firstly, as investor in China, we got to understand there are always two CEOs of a company. The first CEO is the one that you see in the annual report. And the second CEO is the Chinese government. Because the Chinese government is going to have a strong say of where industries are moving towards. And hence, we got to look at both parts, to do our homework, to look at the company, and also to look at the China 5-year plan. Because all these are usually not unplanned. The Chinese government usually lay that out in advance by sharing what is the 5-year plan for China. And hence, if we understand that and we go in that direction, we will do better. And secondly, I think we got to be, I'll say, more selective in where we are investing in. We got to go with the direction of the Chinese government. I think areas like renewable energies, high-tech manufacturing, which the Chinese is going to put emphasis on. I think that part we're likely to do well in the near term and even the longer term. Longer term, I think this redistribution of wealth will cause a lot more consumption, and the consumption sector will do well as well. So in summary, what I'd like to share is, firstly, for Evergrande, I don't think it's going to be a big crisis. It will blow over. Secondly, for the China economy, short term it might slow down, but long term, in fact, it's going to be very positive. And thirdly, on the China stock markets, we need to really do our homework and to navigate more selectively. So I'd like to again thank you for your trust and confidence with us all this while. Rest assured, we have and will always be working hard for you to be mitigating the risk and look out for opportunities for you. So do stay the course, and we'll enjoy a path of joy and prosperity together. Thank you.